So, hi guys, welcome back. Today I'm going to be looking at AMD, or Advanced Micro Devices. I just want to point out that I was looking at this company last night and I thought I'd record it in the morning. I didn't really expect the stock to jump more than $8 or more than 6% just overnight. So when I was making this investment thesis, I was looking at a stock that was about 16 to 18% below its high, but now it is much closer to its high. It's about 10% lower than where it was originally, but the investment thesis still stands, and I hope you do enjoy this video. We're going to be looking at the recent crash in stock price over the last few days. That's over here. Then we're going to be looking at their Q3 earnings guide. We're going to be looking at two different investment theses, both bull cases for AMD, and then we're going to be finishing off with some technical analysis, and we'll be looking at some entry prices and what else the stock is going to be looking at in the future. And if you do find this useful, and if you do find this video informative, do consider subscribing or liking the video. It does help me out a ton, and it's free. If not, thanks for watching anyway. Onto the video. So this first article reads, "Don't let a nervous market scare you out of AMD. Over the past few years, AMD has delivered stunning returns to investors, but given what has played out of the markets over the past few weeks, I can see why many folks will be itching to sell AMD stock. Up more than 1,100% in the past 5 years and more than threefold since the spring of 2020, it may seem like muted returns lie ahead for this semiconductor giant. However, I wouldn't assume that right off the bat that it's going to play out that way. Why? You may point out to the continued bull market or the global chip shortage as the main reason behind the stock's successes. True, both of these factors did play a role, but not the main role. Instead, the factors fully under AMD's control have what has really propelled the shares to all-time highs, grabbing market share from rivals such as Intel, making the right moves when it comes to fast-growing user-owned markets, and the actions of AMD's talented management have been key to its success. Market conditions may change and the chip shortage could resolve, but this does not change the third and the more paramount factor. So as AMD continues to crush it in existing markets and move into new opportunities, AMD stock invested should certainly stick around for the ride. So AMD stock at a glance. Going into November, things were humming along for the shares of AMD. The stock was trending higher following its strong third quarter results on October the 26th. For the fiscal quarter third, the company reported $4.31 billion in revenue, up more than 54% year over year, and ahead of its side sell estimates. Earnings per share of 73 cents came in ahead of estimates as well. Along with this, another development helped sustain the bullishness for AMD stock, a possible metaverse catalyst. Granted, investors may have come up a little bit too enthusiastic about this development, with the operative word being their positive. Nonetheless, it did help the shares make it to their all-time high. However, following the sell-off, the market seems to have forgotten about the company's positives, shifting its focus into its negatives and vulnerabilities. These include stuff like being an overvalued company with quite a high PE ratio, and how market enthusiasm for growth stock could push the shares lower, or how user end markets may slowly wane over time. However, the author believes that plenty of runway lies ahead, now trading between $135 and $140 per share, but currently trading at $143, almost $144 per share. Concerns are that AMD stock will fall even lower before it exceeds its all-time high of $164.46. Bearish analysts and commentators point to many things that back up this take. They point to its high valuation, the bears talk about the risk that the global chip shortage will eventually end, or that the fact that demand amount end users in cloud computing, data centers, and gaming will wane, causing AMD's growth to slow. However, if you do look at their CEO Lisa Su's statement at the end of this year's performance, she reads that our business significantly accelerated in 2021, growing faster than the market based on our leadership products and consistent execution. For 2022, overall growth may not necessarily accelerate, but given these two strengths, leadership products and consistent execution, AMD stands to continue growing faster than the overall chip market, and that includes gaining more market share from rivals. That also includes benefiting from strong demand among key end user markets. So the bottom line on AMD stock. Beside continued success with its current game plans, there is something else in play that bodes well for AMD stock going forward, and as the author recently talked about, the company's growing exposure to 5G networking is also notable. So overall, this article basically talks about how the worrying of AMD, while it is valid with the slowing of growth, it is not the end of the it's not the end of the world for this company. They have a very successful management team that has worked extremely well over the past few years, and on top of that, they have been consistently growing and taking market share away from rivals. So even if growth is to slow, it would still become a very, very strong semiconductor company on the global stage, and eventually its valuation will come back more down to earth, and it would be a very good long-term buy in my opinion. So the next thing we're going to be looking at is their quarter 3 of 2021 summary. So we'll just be going through a few graphs and a few notes about how the different segments of their business went. So in quarter 3 of 2021, they had a record revenue of 4.3 billion, up 54% year over year and 12% quarter over quarter. They had a gross margin of 48%, which is up more than 400 base points year over year and 80 base points quarter over quarter. Their OPEX of 1.14 billion and their non-GAAP OPEX of 1.04 billion. There's significant year-over-year growth in profitability. They have an operating income of 948 million with a non-GAAP operating income of 1.06 billion. Their operating net margin of 22% and their non-GAAP operating margin of 24%. Their net income of 923 million and their non-GAAP net income of 893 million. Their diluted earnings per share of 75 cents and their non-GAAP diluted earnings per share of 73 cents. Their cash equivalents, and short-term investments total up to 3.6 billion. Their operating cash flow of 849 million leads to a free cash flow of 764 million. They repurchased more than 7 million shares for 750 million total. And their Xilinx acquisition remains on track for the end of the year. And that was another semiconductor company that operates in the US, I believe. So now the first segment we're going to be looking at is their computing and graphics segment. So they had a revenue of 2.4 billion, which is up 44% year over year, 7% quarter over quarter, and was driven higher by their Ryzen, Radeon, and AMD Instinct processor sales. They had a higher average selling price, so client processor average selling price grew year over year and quarter over quarter, given by a richer mix of Ryzen processor sales. Their GPU average selling price grew year over year and quarter over quarter, driven by high-end Radeon graphic product sales and AMD Instinct data center GPU sales as well. Their operating income of 513 million was significantly higher than 384 million a year ago and 526 million in the prior quarter, so it did dip slightly over the last quarter, but it was still a significant amount up from a year ago, which is still pretty good for the business. It was up year over year, driven by higher revenue, partially offset by higher operating expenses, but it was down quarter over quarter due to the higher operating expenses that they incurred. The strategic news and highlights. They launched the Ryzen 5000 desktop processors. Acer, Asus, HP, and Lenovo expanded mobile offerings powered by the Ryzen 5000 mobile processors. They had significant year-over-year growth in the commercial notebook deployments across the public sector and Fortune 1000 companies. Their RDNA 2 GPUs grew significantly, driven by high-end Radeon 6000 GPUs and the launch of the Radeon RX 6600 XT GPUs, and the data center graphics revenue more than doubled year over year and quarter over quarter, and was led by shipments of new CDNA 2 GPUs. The next segment we're going to be looking at is their enterprise, embedded, and semi-custom segment. This had a revenue of 1.9 billion, which is up 69% year over year and 20% quarter over quarter, which is driven higher by their EPYC processor and semi-custom product sales. They had a higher operating income of 542 million, up from 144 million a year ago and 398 million in the prior quarter. It was up year over year and quarter over quarter, driven by higher revenue and a richer product mix, which was partly offset by higher operating expenses as well. The strategic news. They had a sixth straight quarter of record server processor revenue. Their Microsoft Azure and Google announced multiple new instances powered by their data center processors. They had strong enterprise growth driven by the ramp of server platforms from Dell, HPE, Lenovo, Supermicro, Cisco, and others. They won multiple supercomputing installations, including one laboratory in Polaris's supercomputer, and their semi-custom revenue grew year over year and quarter over quarter as demand for Microsoft being Xbox and Sony being PS, the PlayStation, their game consoles remained very, very strong. So the revenue trend, as we saw clearly, they had a 54% year-over-year revenue growth, and it has been consistently increasing since the quarter one of 2020. Overall, a very good sign for the company. Their gross margin trend was up 4 points actually remained same over quarter two 2021 to quarter three of 2021, but was 4 points higher between quarter three of 2020 to quarter three of 2021. And overall, it is not the greatest trend, but it is trending upwards and is a good sign for the company. And they have a strong gross margin expansion there as well. Their earnings per share, we're going to include the valuance allowance release they had in quarter four of 2020, where they released 1.3 billion of its 2.9 billion income tax valuation allowance. And that valuation release had a $1.06 benefit to quarter four of 2020 earnings per share. But even if we ignore that, they still have had massive growth over the last year, going from about 14 cents in quarter one of 2020 to more than 75 cents in quarter three of 2021, and that's a 43 cents year over year increase compared to quarter three of 2020, which is a very good sign looking at the earnings per share for AMD there as well. Let this load up. So this is just the profit loss. So the revenue was up 54%, gross profit was up 70%, operating expenses were up 46%, operating income was up 111%, net income was up 137%, and earnings per share was up 134%. So the real good thing that we're looking at is previously we kept hearing that they had higher operating costs, and while the operating costs only was up 46%, you had net income and revenue going up much higher than the operating cost was up. So they are using their money quite wisely, and their return on investment in that is quite good as well. So if you want to look at their non-GAAP one, you can just pause the video and have a look there as well. Just some quick segment results. Their computing and graphics, their net revenue was up 44%, their operating income was up 34%. For enterprise, embed, and semi-custom, their net revenue was up 69%, and their operating income was up a whopping 284%. And other categories, their operating loss was down 41%, which was, although not great, it was offset by a lot of higher in terms of operating income and net revenue from the rest of them. And then overall, their net revenue was up 54%, and their operating income was up 111% there as well. So the next thing we're going to be looking at is just an article on Seeking Alpha written by JR Research, which reads, "Adds this amazing semiconductor stock at a fair value." So summary of this article, AMD is one of the leading growth-oriented semiconductor company. It's been penetrating into Intel's closely guarded data center segment. AMD stock has fallen more than 16% from its all-time high. Currently, it would be 10% from its all-time high. And he talks about why it is apt to buy the stock right now. So the investment thesis. AMD is a high-quality semiconductor company. CEO Dr. Lisa Su and co. have proven their ability to execute their technological roadmap over the years, and have made it successful forays. It has made successful forays into Intel's highly prized data center vertical. AMD is one of our preferred plays among its leading growth-oriented semiconductor peers. It's highly profitable and is still estimated to churn out robust growth rates moving forward. Moreover, we think its valuations are also reasonable considering its attached growth premium. As a result, the stock is given the very bullish rating by the Seeking Alpha Quant rating. Due to the current entracement, the stock has fallen 10% from its recent all-time high. Although we wouldn't consider the price action optimal, we think it is still fairly valued, and we discuss why investors should take the opportunity to add some exposure right now. So AMD is still expected to grow robustly. The semiconductor market is estimated to grow by an incredible 25.6% year over year in 2021. We can easily observe that it was after a lower base from the previous peak in 2018. Therefore, coupled with the multiple secular tailwinds driving the industry this year, could be considered an exceptional year. The market was estimated to increase at a compound annual growth rate at 10.3% from 2016 to 2021, skewed by this year's phenomenal performance. However, the growth is expected to normalize from 2022. WSTS and the SIA estimate the market to grow at just 8.8% year over year in 2022. Furthermore, IDC expects potential for overcapacity in 2023 as larger scale expansions come online towards the end of 2022. Therefore, investors who have only entered the semiconductor stocks in the latter half of 2021 have been cautioned. The IDC was also somewhat downcast when it added and edited. We can argue that a lot of capacities are going to be needed because we're still seeing very good secular semiconductor market growth. However, we have started to see a slowdown in consumer sentiment. We don't think that all additional capacity investments will be realized, but the additional capacity, it is going to be enough that I think could turn the supply-demand equation and really change the dynamics that we're seeing. Nevertheless, Global Foundries, GFS, AMD's foundry partner for its trailing process nodes, remains confident that the semiconductor industry growth over the next 10 years continues to bolster capacity. CEO Tom Caulfield recently articulated it took 50 years for the industry to go to 5 billion today, and now it's estimated that the industry will grow to 1 trillion in roughly 8 years. It's hard to overstate the amount of investment that the industry will have to deliver to meet this challenge. For growing context, GFS CEO expects the market to increase at a compound annual growth rate of 7.7% over the next 8 years. Therefore, it's clear that semiconductor investors should expect normalization in growth ahead. Moreover, we believe that the specter of slowing growth will start hitting home when supply shortages loosen up towards the end of 2022 or early 2023. Therefore, we believe that investors must start focusing on growth-oriented and leading semiconductor companies with proven execution and a profitability track record. Moreover, their valuations should still be reasonable, even if they're not necessarily cheap. In addition, they should also be able to participate immensely in the secular tailwinds that could potentially buffer the impact on the industry's inherent cyclical nature. Consequently, we believe that AMD offers this to investors as a well-balanced perspective of growth, profitability, and reasonable valuations at the same time. So if we're just looking at comparing AMD to some of their competitors, their revenue compound annual growth rate between 2021 and 2023, it is far ahead of Qualcomm and Broadcom and slightly below Nvidia. Their earnings before interest tax compound annual growth rate between 2021 and 2023, basically in track with Nvidia, and their margin of 24% and 43% is much lower. So overall, it is quite stronger than its peers, and has remained in line with Nvidia, another very good growing semiconductor company, but it is much better buys than Broadcom and Qualcomm. Investors can quickly glance over the table ahead, where AMD are neck and neck in terms of their estimated top line and adjusted earnings before interest tax growth. Nevertheless, Nvidia's adjusted earnings before interest tax estimates are markedly higher. Therefore, straightforward comparisons in terms of their profitability with AMD may not be clear. Nonetheless, we could extrapolate both companies being among a similar growth bracket. So this is one of the reasons why the author believes that AMD is a good growth semiconductor company. So AMD's key revenue segments are firing on all cylinders. Notably, the company's business model are focusing on the premium leading node segment that it's seen consolidate its clout among Taiwan Semiconductor's foundry customers. Tom Hardware has reported that AMD is now TSMC's third largest customers behind Apple and MediaTek. It estimates that AMD's clout over the rest of TSMC supporters will continue to strengthen over time as it expands its lineup in the higher PC, CPU/GPU, and data centers CPU/GPU segment. Keen investors should be aware of Apple's prowess in the semiconductor supply chain. The Cupertino company has often wielded its influence to drive supply chains outcome in its favors, and we've covered these aspects in our previous TSMC article and Apple article on Seeking Alpha as well. You can search up JR Research if you do want to read those. Apple's relationship with TSMC is so tightly knitted that it's challenging to fathom one surviving without the other. Since AMD depends entirely on TSMC for its 7nm and below process, the relationship and dependence will be even stronger moving forward. AMD may not have to be made significant gains in the PC segments against Intel and Nvidia lately. However, we believe that the company is actually prioritizing its supply chain in favor of its enterprise, embed, and semi-custom segment. AMD has continued to make gains against Intel in its data center segment. Overall, AMD has continued to strengthen its leadership among hyperscalers as its processors are now fully represented. Notably, Facebook or Meta Platforms recently emphasized that it will be working closely with AMD to chart the former metaverse ambitions, leveraging AMD EPYC processors. We believe that AMD's leadership will be further entrenched as it launches its 5nm Genoa processors based on its Zen 4 microarchitecture, which will succeed Milan subsequently. Notably, CEO Dr. Lisa Su noted that the company's momentum in this critical segment is still in early innings, as she emphasizes. We've been working for years with all other cloud companies. We were just happy to announce Meta as the newest user of EPYC, but it underscores the fact that we are 10th in the largest hyperscalers. I would say we are nowhere near max penetration. There's a significant amount for us to continue to expand our workloads with partnerships with cloud vendors. Milan has ramped really well. I think our socket compatibility with Milan, Rome, and Naples has worked well for our customers, so they've been able to bring it on quickly. We're excited about Genoa Zen 4. But I think the key takeaway for the people is that this is a great growth business from the standpoint that the market is very strong, and that AMD within the market is participating in more and more of the segments, so I think we have formed a deeper partnership with our largest customers. So is AMD stock a buy now? According to our internal estimates, we explain that AMD stock seems to be reasonably valued right now. Moreover, the stock is trading at an EV/NTM EBITDA of just 33.1 times, which is slightly above its 3-year mean of 31.4 times. Notably, it is also nowhere near its 3-year high of 49.8 times, and it shows that AMD has gained tremendous leverage as it scales. In addition, our DCF estimates has also informed us that AMD is not expensive now. Moreover, we believe that we use reasonable and prudent growth rates to reflect the potential slowdown moving ahead. However, we believe that AMD's solid, robust positioning in the leading-edge consumer and data center segments should shield it from a possible cyclical downturn. Looking at their DSF valuation metrics, we can see that their WACC estimate is 77.5%. Their revenue estimates of financial year of 2025 is $26.8 billion. Their compound annual growth rate is 13.5%. Their earnings before interest tax estimate is $7.1 billion. Their earnings before interest tax compound annual growth rate is 16.7%. Their earnings before interest tax margin is 26.5%. Their unlevered free cash flow estimates is $4.96 billion. Their EBITDA exit multiple is 30 times, and their stock implied fair values is at $141.83. And currently the stock is trading at $143.85. That's just slightly above where the article deems it a fair value. So based on our DCF model, AMD is also within our fair value zone now. While it's not cheap, we believe that AMD is a fantastic growth company. In addition, Seeking Alpha rated as very bullish, and it gave the stock the best possible A+ growth for profitability and momentum. So we'll just finish off with some technical analysis. I'm sorry this video went a little longer than I expected it to be. I was hoping it to be about 20 minutes. I think it's going to hit about 25 minutes after this. So recently the stock has had its correction. It did rebound slightly, but I would say it is slightly above its 20-day simple moving average. So while it hasn't rebounded off that, I don't believe the stock will go much lower than that. We can see regularly the stock has used the 20-day simple moving average as a rebound. It did crash slightly in the beginning of 2021, but ever since then, anytime there's been a correction, it's basically rebounded at the 20-day simple moving average. Here we can see it did come all the way down to 129 for a while, with the simple moving average being at 126. So that would what I would be considered the most recent rebound, and the stock is once again on its uptrend. The 20-day or hasn't crossed below its 50-day, and neither has it crossed below its 200-day. So the stock is not yet down in a downtrend. However, the market has been correcting quite significantly on a lot of growth stocks, so I wouldn't be surprised if the stock would come down to maybe 126. Even if it doesn't, as the author of that article did, 140 to 145 is still a pretty solid position to buy this company. as it does have future in 5G, it has future in the metaverse, and it's continually taking away market share from larger players such as Intel, Qualcomm, and Broadcom as well. So that brings me to the end of this video. If you do enjoy, consider subscribing. If you found this useful, share it with someone. I don't know, like, subscribe, let me know what you think about AMD, and thanks for watching. I'll see you in the next video.